after such a long hiatus. We're doing an in-person conference at the end of January. So that's just next month in Portugal. We're going to have a conversation. We're going to have many conversations about offshore structuring, visas, citizenships, investment migration, all stuff like that, for you to live your life by design, put together the lifestyle that you want to enjoy your freedoms. So without further ado, I'm going to introduce you to a very special guest, Niklas. Niklas, would you like to introduce yourself?
Yeah, hi Darren. It is very kind of you to interview me. We met, I think, twice at tax conferences, and I am a tax practitioner here in Austria. I deal with high net worth individuals, so people moving around, families, individuals, and so on.
Yeah, and of course, you know, just to add to your very modest introduction, you are the tax partner in the largest tax practice in Austria, Germany. Am I correct in saying that?
Yeah, 50% of that is correct. I am a partner in Austria's largest firm, but we are only in Austria, not in Germany.
Okay.
But in addition, we're also in Eastern Europe. So we have I think like 350 lawyers in 13 countries. The bulk of the lawyers is in Vienna, and yeah, the firm is called WOLF THEISS. For your listeners, it's some European distant firm, but here in Europe, it's one of the larger firms, I would say.
Okay, wonderful. And of course, you know, as I always say, that this is just a general conversation. Nobody's giving tax advice. So please, no one listen and think they're going to get some sort of actionable intelligence. Hopefully, what you will walk away with are general principles and general concepts that you want to keep in mind as you engage an advisor to work on your specific situation. So this is not advice, general conversation. And of course, Niklas, you are an author, editor as well. Can you tell us a bit about that?
Yeah, I've published a few books, 3 actually on the topic of crypto. So I always say that I'm a lawyer and I do like these really boring things, taxes. And the only aspect which is a bit more exciting is crypto. And crypto is really is a wild and crazy area, and it is so different from the tech side.
Well, actually, since that is probably the hottest topic right now, maybe we could just jump right in. Obviously,
sure.
There's been a disruptive year in the crypto space. I mean, it always is. But so I guess it's never a typical year, but this year will probably be marked in history as disruption to the extent that institutions and exchanges or players that one thought were, you know, like the emblem of stability and growth and progress turned out to be the opposite. So most recently we had the high profile, well, I'd use the term failure. I know it's still, you know, it's still a legal process going on, so we don't want to jump to conclusions. But FTX in the Bahamas and the U.S. is going through a situation right now. I mean, not to comment on them specifically, but generally speaking, what do you think the implications would be on the state of the industry? I mean, there is a school of thought that it would be used as an impetus to greater regulation in the sector. What are your thoughts?
Yeah, I mean, what we have always been saying is this mantra, not your keys, not your crypto. So just think of the origins of Bitcoin, invented by the pseudonymous Satoshi Nakamoto at the height of the global financial crisis, where we did not trust banks. We did not trust these central counterparties. And we had this money that you hold yourself. You hold it on an address which is controlled by the corresponding private key. And now, since these times, since 2009, when Bitcoin started, you've had tons of people actually leaving their crypto with somebody else, leaving their crypto with mostly exchanges. It started off with Mt. Gox in 2014, and it has been going on every year. There have been exchanges or other custodians who went belly up and took customers' funds. There was, I mean, some of these cases are like really intriguing. Think of the Canadian case, Quadriga CX, this guy who did a trip, a vacation to India and suddenly died. Everything was
Netflix,
gone. There's a Netflix series, documentary on this story. So we have always been saying, hold your crypto yourself, yeah, self-sovereign. You hold it on your address. You have a hardware wallet, and you store the crypto assets that you own. Otherwise, it's just sort of a promise by an exchange that they might honor or not honor, depending on their solvency. And I mean, in 2022, you said at the beginning it was what did you say? It was did you say disastrous, or
Disruptive.
disruptive? Yeah, I was thinking, Darren is really rubbing it in here. I was feeling the pain myself. Yeah, but anyway, so it was really a bad year, and it started off. I mean, we're in the midst of a bear winter since time immemorial, and then we had this Terra Luna, this Terra USD collapse, which had a ripple effect. And then you had, for example, Celsius, one of these basically banks, you can call them, not really being a bank, but basically a corporation. You send your crypto assets to an address of theirs, and they pay out juicy interest. Why can they do that? Because they engage in like super risky activities, which generate an even higher interest rate, so that they can basically keep a margin and pay off your interest. But Celsius went bankrupt, and people who had not heard of this mantra, not your keys, not your crypto, really should have understood it at that point in time. So if you have an account with FTX in May of 2022, actually that should have been the time you woke up and said, FTX is a super brand, and Sam Bankman-Fried seems to be a cool guy. I don't like his hairstyle, but he's making a ton of money, and so everything looks great. But nevertheless, let's be on the safe side and let's withdraw our crypto assets, because you only need them on an exchange if you're doing trading. So if you buy and sell the whole day, then of course the assets have to be on an address of the exchange. But if you're just using the exchange to buy, then you should, it's like a public toilet. You go in there, you do what you have to do, and then as fast as possible, you go out. You don't spend too much time there. Why would you sort of spend too much time there? Yeah. So it's exactly the same with these crypto exchanges. And
Right.
you asked about regulation. Yeah. So I think this will come, and actually I'm very much in favor, because these companies are in favor of this regulation. There are other types of regulation I'm not so much in favor of, but these are basically central intermediaries holding assets. We have no insight, there's no transparency what they're doing. I mean, if you looked at the bankruptcy filing by this I forgot his name, and spectacular things that we now learn about what was going on at FTX, but we did not have any insights into the company. They are kind of black box, and so regulation is really something that should exist here. So these centralized players, where there's a risk for consumers, they belong regulated. They should not be treated differently from a normal bank, where there's also certain regulation. You cannot commingle assets, you cannot pledge your customers' funds to take out loans to engage in speculation. So all of this is actually coming in Europe. It's called MiCA, Markets in Crypto Assets Regulation. And I think in the US, you have your 100th proposal in Congress. Or is it the 200th? At some point, it will also come in the US. Yeah.
Right. So it's not, so it's the exchange as well, but also the marketing is a key point, right? Because what has come out is, well, you know, there's been a laundry list of so-called influencers in the social media space who you know receive money, as you know, as they do for other products as well, but perhaps they found themselves promoting a product or service that they didn't fully understand themselves, and they weren't perfectly, you know, up to speed with the risk involved, you know. And it's not just in crypto, but in the general financial services space. Like there's this one influencer based in Dubai, And another, well, I wouldn't say another controversy that's erupted in the last couple of weeks was an online, I don't know what you want to describe them. They're called established titles. So their marketing pitch was you pay them a certain amount and they give you a piece of land in Scotland, like 1 square foot or whatever. And based on some law in Scotland that they believe existed or they claimed existed, you were therefore entitled to call yourself a lord or a lady. So, and they were spreading money around quite lavishly to influencers in order to promote this, and apparently they did pretty well. But there are a number of scam busters online, but one of them just did the check, and they said, look, I'm pulling up the law for Scotland, is available online. And this, what they're saying, is not possible. Furthermore, I've done further checks on this company, and it's not even based in Scotland, it's based in Hong Kong. So it does seem to be a scam. So I mentioned that because some of the same influencers who were involved in FTX were also involved in established titles, as well as promoting other tax benefits and tax schemes and so on. So I'm wondering if it is these guys aren't up to speed or they aren't proficient enough to read to perform basic due diligence, then do they have any space, or do they have the right to promote any financial service at all? And would the legislation that you see coming around the corner for crypto in particular address situations like this?
Yeah, I mean, that's a great point. Yeah, and you're right. We should not only focus on these exchanges, these big names, but there are these individuals out there promoting all sorts of shitty investments, be they crypto or real world. I had not heard of this Scottish scheme there to become an earl or lord or whatever, or lady, but it sounds like one of these typical things. Yeah. Yeah, it is. If you just sort of open YouTube and type in crypto, you will see these small images of YouTubers with distorted faces, screaming. It's just exactly. That's it. For the people only listening to this podcast, they cannot. They have to just imagine the faces we're just doing now. But basically, I mean, it's full of these people selling things and not disclosing that they have purchased these coins and tokens and whatever. And so these are classic pump and dump schemes. This is classic market manipulation. Sometimes this is classic insider trading. And the only thing that helps these people on the Telegram groups, on YouTube, on all these WhatsApp groups that are out there, and so on. The only thing that still works for these people now is that most of these instruments might not be financial instruments. There might be something different, or the countries where the countries that they are targeting do not classify these crypto assets as falling under these normally existing regulations for financial instruments, and therefore they will not be prosecuted. But in Europe, the tide is shifting again with MiCA. So if you advise on buying crypto assets or portfolio management or similar services, so if you do something that is normally regulated in the traditional financial world, this will also be regulated now with MiCA. And also, I mean, the SEC has and the SEC is an entire topic of its own, Gary Gensler, but the SEC has I think opened the case against 2 or 3 Coinbase employees who are acting on inside information, which coins and tokens Coinbase was going to list, and they purchased these tokens and these coins and tokens before the announcement at a low price, and after the announcement they sold them. So very, very simple scheme. They did not even make a lot of money with that, but they were arrested, and the SEC is going to prosecute them based on insider trading. So the SEC is using these statutes that exist for stocks, Coinbase is vigorously sort of denying that these are stocks, because it will also be a problem for Coinbase that they have listed stocks without the necessary registration and whatever is necessary under U.S. laws. So I think this is like the whole space is full of shady players, and these influencers. Most of them are really untrustworthy. You have to really watch out. You should not believe. And they're always saying, this is not financial advice, and then they're giving financial advice. So it always begins with, this is not financial advice, and then it goes on for 30 minutes about what you should buy. So
yeah, and of course some pretty famous names like Kim Kardashian got pulled into that. But okay, so you know, it is what it is. So watch this space basically, because regulation is now inevitable, and we'll see over the next few years or so a completely different approach to the way these services or products are being marketed. Okay, fair enough. So that's it for crypto. So let's jump to another interesting topic, because these are all quite interesting, and this is investment migration. So this is another space that is more or less the Wild West. It is completely unregulated. Aside from some jurisdictions, notably, I think Australia and Canada, for the most part, investment migration, anyone can just get a flashy website or get a great YouTube channel going, and they can sell the hell out of it. And you've heard no end of horror stories. That's on the selling side. And on the actual product side, some major jurisdictions don't like it. I mean, the North Americans don't like it too much. The Europeans clearly do not like it. And we've seen that in the last few years, we've seen the Cyprus program being shut down, at least the citizenship part. You can still get a visa, but citizenship no longer. And we've seen Malta being taken to European court, you know, over their citizenship program. So within that context, how does Austria fit in? Is it different, and how?
So maybe to sort of maybe let's take a step back and see what is happening in Malta, because it's like really interesting to understand and to then contrast that to the Austrian program, to the program in my country. So basically, how Europe works, and Europe is like really very complicated, or the EU is sometimes very complicated to understand. And of course, you know that the EU is not the same as Europe. So there are some countries like the UK or Switzerland that do not even belong to the EU. But basically, in the EU, you have the member states. There are 27 member states, and they have rules on citizenship. So, for example, if you're born with parents from that country, with one or two parents from that country, will get a passport. There are rules in some countries that you can get citizenship based on merit. For example, if you join the Foreign Legion in France, I understand, then you can get citizenship, or if you do something spectacular in some other country, then that country might grant you citizenship as a gesture of appreciation for what you have done for this country. But at the same time, there's also EU citizenship. So having a passport of an EU member state actually also means having an EU passport, and it gives you several rights that come from the EU treaties. So, for example, you can then go to any other member state and live there under certain prerequisites are fulfilled. You can buy real estate, you can open up a business, you can buy a business, open a bank account, and so on. So life gets a lot easier having an EU passport. And now the thing is that the European Commission, they have a bit of a centralizing tendency, and I think all of this is, you would call it a power grab. So what they are saying since many years is that programs through which member states hand out passports to applicants under so-called citizenship by investment programs, that they fundamentally violate EU law. And the citizenship by investment program is basically a program where somebody, where an investor, you can call him, buys real estate in a country, makes a charitable, makes a contribution to the government, And under a special program, these 2 steps enable him then, after going through a very extensive due diligence process, enable him to become a citizen of that country, and as a consequence, a citizen of the EU, an EU citizen. So the European Commission really has targeted these citizenship by investment programs, and has been saying that while they acknowledge the right of member states to grant citizenship, they do not acknowledge the right of member states to grant citizenship under citizenship by investment programs, because the fear is that thousands, tens of thousands of money launderers will basically use this route to park their illegal proceeds in Europe to enter our territories. This is a totally overblown fear. On the one hand, the numbers that we're speaking of, this is a mere 100 in all of the countries concerned. On the other hand, as you know, we have the Mediterranean, which is an open border, and you have the Ukraine, which is also an open border, and the vast amount of people coming through these borders on an undocumented basis is just incredible. And the citizenship by investment program numbers, they really pale in comparison. So the fear of the European Commission is totally overblown, and there are also no legal arguments. Nevertheless, the European Commission has pressured member states. So Bulgaria had a program, and this program was halted. Cyprus had a program. Cyprus was a lot more well-known than Bulgaria. The Cypriot program was halted. And now the European Commission is taking Malta to the ECJ. So a case has been filed. Our firm is probably going to also make a submission to the court, a brief explaining why we feel that this is that if the court would follow the European Commission side, why this would be totally in violation of the EC treaty, of the competency of member states. It is a question of what is a central competency and what is a competency of the member states. So the Maltese program is a citizenship by investment program, and in Austria, and this is like a really long answer for a short question.
That's fine. Yeah.
In Austria, we have a provision in the Citizenship Act which says that if a foreigner, if an alien, does something which is in the interest of the Republic of Austria, if he has done something, and if there's also the expectation that he will be doing something in the interest of Austria, then the government, the federal government, may pass a decision. It's totally discretionary. May pass a decision and may waive the application of all the normal requirements that typically apply if you want to get citizenship. So you don't have to have lived here. You don't have to have a knowledge of the German language, which is not that easy for non-German speakers. You don't have to do a culture and history test. You don't have to give up other passports and so on. So we are currently, as a firm, doing a few, not many, but this is a very special program. We're doing a few of these, we have a few of these clients. They are all very special. They all do very sort of customized things. I cannot mention what these projects are, but basically the idea is something that sort of really contributes to Austria. It can be in the area of business. So you might set up a business, you might sort of expand your existing operations to Austria, create jobs. It might be just a simple donation to one of Vienna's fantastic museums. It might be that you, I don't know, that you bring to the table, I don't know, maybe you're a scientist and you have a whole laboratory which you uproot from one country and basically set up roots in Austria, bring all these people, all the know-how, all the research capability to Austria. So it's an interesting program. It is very expensive, so it's not like some programs. I don't know. You probably heard of Montenegro. It's basically 450K. So it's 200K for the donation and 250K in the cheapest case for the real estate. So basically it's 450 outlay and that's it. And I mean, you have the real estate, you can even sell that hopefully in a few years time. So it's cheap, whereas the Austrian program is like discretionary. It is sort of very tailor-made for the client. It really has to fit to his story. And it takes a long time, but it is an Austrian passport, and an Austrian passport is, I think, number 7 or something on this well-known Henley list of passports.
Right.
So it's really a strong passport. It's a passport which allows you lots of things. Yeah.
Okay, that's good to know. So it is definitely unique, and it is not the typical investment migration package products, right? Okay, I got that. Now, but again, to borrow your phrase, taking a step back and looking at what's going on in the industry, I get what you're saying, and if I'm understanding you correctly, you don't think that the European courts have a basis really for the action they may be taking against Malta. But regardless, that sentiment is still there, right? And there's still some sort of dislike of those types of products. And even though they may not have a basis, they have successfully dealt with at least 2 or 3 other European countries who had similar types of programs. So with that in mind, it seems, one can speculate that where there's a will, there's a way, and they will figure out some sort of angle to get it curtailed. Now, once that's done, I'm looking at the bigger picture. I saw what happened to Vanuatu, where they lost access to the Schengen area. And I know that there's also dislike of the Caribbean programs. So, my position is that these things have a limited life. At some point in time, they're going to be probably not completely shut down, because as you pointed out, you really can't take away the base, the ability of a country to give citizenship, especially in exceptional circumstances. But the packaged product side of it, I kind of see that disappearing. What are your thoughts on that? What is your perspective on what the future holds?
Yeah, I mean, as I said, and as you repeated, basically there is no merit in the EU Commission's case.
Yeah.
But that does not mean that the ECJ will decide in exactly this way, because the ECJ, the European Court of Justice, very often sees his role less in an arbiter of truth and less in sort of analyzing statutes, but maybe you could say he's a kind of motor of integration, trying to sort of integrate the European Union, and in many cases basically helping the European Commission to strengthen its base. And so it might well be that this battle is lost on political grounds. On legal grounds, the case is quite clear. I've read a number of articles and assessments on this. There's a group which deals with investment migration, and they have also a kind of statement on the Maltese case. We'll see, but it's definitely, I think, on the sort of horizon for the European Commission, regardless of how this case ends, to somehow maybe pass a kind of directive which sort of harmonizes these rules. And the big topic actually is, because you know that, I mean, corporate taxation, here the sort of the role of the EU is really strong. So this is getting more and more harmonized. You have the OECD initiatives and so on. So probably the next frontier that the European Commission will want to tackle is these special regimes for high net worth individuals in the EU, in EU member states. So, for example, I mean, originally you had the UK, it's not anymore a member state, with the resident non-dom regime. You had Switzerland with the lump sum of forfeit regime. But in the EU, you have the Portuguese non-habitual resident regime.
We have the Beckham law in Spain. We have
in Spain, Beckham law,
Ireland, flat tax in Italy.
100,000 euro. And Greece, which is a copy of Italy. So there is a lot of in Italy you have also other regimes. So there's a lot of systems. There are a lot of systems in place which want to attract high net worth individuals from other countries.
Yep.
The idea being, of course, it's unfair to tax this guy and have him, he only has to pay 100,000 euros, whereas I am an Italian living here for decades, since my birth actually, and I pay 5 times as much tax that he does. But the idea is always, okay, but basically he has no Italian connection. He would not be paying any tax, and we are bringing him here. So this will benefit us because he does not only pay the 100,000 euros, he will have staff and he will pay value-added tax for his cars and villa and I don't know what, gadgets. So there will be a lot of revenue coming from this. And the EU Commission, I think they fear that these regimes, they somehow distort the movement of people. They make tax a factor in moving. And I think the European Commission wants only, for example, the weather and the food to be factors, but not tax for people who think about moving around. Yeah, maybe I'm just sort of.
Okay, so I get that because I remember the NHR in Portugal had to be modified because people were living there basically tax-free with European pensions, and now there's a 10%. I remember when Britain was in Europe, they were put under pressure to modify their non-dom regime as well. So I see some modification, but are you thinking, are you theorizing that perhaps in the years to come, they will be completely removed? Or
no, I don't see anything concrete happening, but like if we look into the future, this is probably something that the European Commission will be thinking about.
I see.
And there's nothing like going on. There's no proposal for a directive on this, but it is obvious that once the Malta case is through, they will have sort of time to think of other topics, and that could be one of these other topics.
That's a fair point. But in between the citizenship by investment and the special regime for individual taxpayers, I see like the in between or the next step perhaps being the golden visas, because essentially it gives you that, right? You pay a certain amount and you are a resident, but as long as you play with your days, you're not tax residents. You're basically, best yet, I mean, you're tax free if depending on your days, right? So I think there was a statement by a minister in Portugal. It can be interpreted in different ways when you really read it, but some people interpreted it to say, hey, the golden visa may be in danger in Portugal. It may be, they're revising it, they're thinking about it, and it may be phased out. And given the pressure that the investment migration, I mean, the citizenships are under, I would have thought, that's probably the next logical step from an EU perspective. What are your thoughts on that golden visa?
I mean, this migration topic, there's like two parts, and you mentioned one is the citizenship part, which is what we spoke about in the beginning, meaning you get a passport which enables you to go to this country and you can even vote in elections. You're like really a member of this community. And the other is residency, which is just the right to live there and to work there. And residency is also there's not one kind of residency, but you have different kinds. There might be residency without working. You can stay there, live there, spend your money there, but you're not allowed to be employed or self-employed. Or it might be something which is generally tied to some specific employment contract, or totally open. You can just work for anybody or on yourself. So residency is this sort of lesser right compared to citizenship. And where citizenship programs are rare, they are basically few in Europe, getting less, as I said, with the U.S. actions. Many countries have these residency schemes, and have sort of schemes which allow to attract skilled foreigners to come to the country. So people who really bring something to the table, a specific kind of know-how or trade which is not sufficiently existent in that country. So this is something that many countries have, and I think this is less problematic because it is more established. Whereas the citizenship programs, you have these outliers. You have Malta, Cyprus, Bulgaria, and more or less that's it. Yeah, and these are all countries which are not strong. Yeah.
Yeah.
Whereas, I mean, a residency program that also exists in Germany and France and Spain and so on. So I think there's less pressure to be expected on this front.
Okay, gotcha. Those are fair points. Now, implicit when I look at the logic of it from, for example, as we were talking, perhaps with what the European Commission may have been thinking, or what they may be thinking, and what some of the promoters push, there seems to be somehow the underlying assumption that low tax or some special tax regime would indeed be sufficient to attract those high net worth individuals. And I think of that, the conference you and I attended, and we're not promoting any one particular entity over the others, but it just so happens in Henley and Partners, they're pretty dominant in this space, and they publish a ranking which gets a lot of publicity and so forth. So you can't help but pay attention to what they're doing. And when they published earlier this year their ranking of the cities in the world with the highest number of high net worth, as they've defined it, individuals, they're not necessarily low tax cities, right? You would have expected, oh, well, maybe Dubai is at the top, or some other zero tax place. But in the U.S., it's it's LA and New York and Chicago and those two coastal cities are
really high tax cities.
Are the highest tax states in the entire
It's not Florida. Yeah.
It's not Florida. So exactly. And there was this other academic that I've been reading. He was at Cornell, but I think he's at Stanford now, Cristobal Young. And he's took anonymized tax data from the Internal Revenue Service. And he is showing clearly that people do not move for tax reasons. And there was this someone else was referencing a billionaire, a guy called Chamath Palihapitiya. He's right.
I've heard of him.
Yeah, you know who he is, and he was also making the point. You know what, tax? Just ignore that. It's a non-factor in your decision, because when you move to a particular city or a particular state or jurisdiction, you do that with so many non-tax factors in mind. What are the capital markets like? What is the ecosystem? What is the networking like? And things like that. Factors that, because when you're playing with your wealth, you can try to increase revenue, or you're trying to reduce costs. And the highest cost for many business owners, investors, will be tax. So I get that, but there's only so much you can do with tax. Whereas if you focus on revenue, it's infinite, right? If you can scale your business, if you get it in the right ecosystem, that's amazing. So to me, it seems to be misplaced even to just focus so much on taxation as this key factor in allowing how many high net worth people to move from point A to point B, point A to point B. What are your thoughts on that?
Yeah, Darren, I totally agree, and I have one case in my practice, which was really illuminating, because this was a 70-year-old client, already retired, from Germany, having an operating business in Germany, married, and there was this plan by a very well-known firm, which basically wanted to solve his inheritance tax issue by having this gentleman move out of Germany. But there were so many complications due to German tax law that he could not basically move from the country where he was living, from Germany, directly to Singapore. But he had to basically spend a 7-year period outside of Germany, but in an EU country. So the plan was for this 70-year-old guy to move for 7 years to Austria, stay there, not die in these 7 years. So he must be on life support until the end of the 7th year, and then to move to Singapore, which is very different climatically from Germany. Germany, Austria, it's very close. Yeah, so it is a similar culture, similar climate, a similar food, similar lifestyle. And Singapore, on the other hand, is like, it's humid. It is very fast moving. It's not like a German city. Yeah? It's a totally different lifestyle. So I thought when I read that all of this makes really sense from a tax planning perspective, and we're really proud as tax practitioners to come up with something that shows so much genius. It's just incredible. The sweat that went into this paper, all these associates who've been working day and night to come up with this fantastic tax optimized solution. But at the end of the day, I thought he's never going to do that. And exactly that happened. His wife said, no way, I'm not going to move twice, and certainly not to Singapore, even if it's the best, even if we did this super rigid analysis and came up with all the possibilities and vetted them and so on. So tax is not the most important factor, because people really, they have a life and they want to have, I mean, the most important thing is, of course, your relations. Yeah. If you move, that already is a problem. You will be cut off from your friends, from your family. All of your activities that you carry out will be somehow impaired. And if you then move to a different country with a very different culture, even if it's like fantastic from a tax perspective, Dubai, no income tax yet, you really have to weigh that. So I think also that you said people going to LA or to New York, like these beacons of high taxes in the US. Yeah. So the thing is that just it is not always the case that if you move to a high tax jurisdiction, that it means that you're going to pay a high amount of tax. You can do a bit of pre-immigration planning. You might put something, you might shelter income into a structure which is non-transparent, not look through, and then do not pay out anything while you're there. So they're always, same is true for Austria. It's basically not like the super efficient jurisdictions, not Dubai or Singapore, or I don't know, some other country with a special regime. But there are some things you can do. And if people call us on time and not like, I'm coming here tomorrow, then we can fix things. Then we can sort of set things up. We might incorporate a Liechtenstein foundation for the client to put in his income generating assets, I don't know, his portfolio, whatever, and sort of shelter that. Yeah? There will be no income tax consequences for him while he's living in Austria. We might take a look at, should he move out again, we'll try to reduce the impact of exit taxation. We have a few benefits. We have no inheritance tax, for example, no gift tax. That is cool. And for the income tax, yeah, of course we have high rates, but you can also structure things sometimes. And so high tax country is not automatically high tax bill. It really depends sometimes on your advisor, yeah, what he can come up with.
Yeah, that's a fantastic point. And I guess those promoters who focus on investment migration, obviously to a guy with a hammer, everything looks like a nail. So for them, the solution is just always to move. Whereas you're right, what you and I do would, tax optimization, wealth protection, there's so many angles or opportunities from a planning perspective, if things are done well in advance, to, I mean, probably not get to zero, but to be more efficient than whatever the headline rate is. So yeah, they're different angles, right? And the point that you raised about still being taxable to Germany even after leaving, it seems to be an increasing trend in Europe, isn't it? Because I know Spain has that as well. Italy has it. I'm talking about like if you move to a so-called tax haven, that there's some fallback rules would apply, and you'll still be subject to tax in your European country of origin. Do you see that as an increasing trend? Is that something you observe?
Yeah, I mean there are various sort of possibilities here. One is exit tax. So we have in all of the EU countries, we have exit taxation since a few years on companies. So if companies relocate, then basically at the border you have to pay tax on your unrealized gains. And a few countries have also introduced that for individuals. So Austria has that, Germany has that, other countries have that as well. And that makes planning more complicated. It's something that has been existing in the US, I think, for many years. So you're deemed when you move out, or even if you give up citizenship in the US example, you're deemed to have sold all of your assets. Now, there are ways to work around this. You can put them into structure if you don't hold them. So when you move out, you're not realizing the gain, or you can wrap them up into some derivatives or whatever that do not fall technically under these rules. So there are a few things you can do. But yeah, it is definitely an aspect. And the second, exactly, I forgot. The second is when you move to a low tax jurisdiction. Some countries' tax inspectors are more aggressive than others, and France, Germany, they are probably the most aggressive in Europe. They would closely monitor where you're going to. So if you're going from France to Germany, then no big deal. But if you're going from France to, I don't know, Singapore, for example, or to Dubai, a bit closer, if you're going to Dubai, then they would really see whether you have moved, in fact, or have you kept your ties with France? Are you sort of, do you have mobile telecommunications bills, mobile phone bills showing that you were speaking in France for so many days? Do you have utility bills showing that you were actually living in this house? Have your neighbors seen you there? There's a lot of information that can be obtained by tax inspectors, and they would do that when you go to an obvious, when you say you're moving to an obvious tax haven. So yeah, you have to be sort of aware. Dealing with tax havens increases the heat, increases the sort of level of scrutiny that you have to then bear. Yeah?
Okay, those are, incredible points. And as you mentioned that, I'm reminded of the situation where I think it was Boris Becker in Germany, right? Where he was caught by virtue of having his toothbrush, right, in his sister's apartment. So yeah, I mean, it's humorous, but the point is a serious one, that the tax authorities in certain jurisdictions take these things super seriously. So you just don't mess with them. Another point, again, with the whole narrative being popularized by those with a vested interest about the whole world moving to either Dubai or to Singapore. I'm coming on my 10th year as a resident of Singapore, which is where I'm right now. I'm also a resident of Dubai, so I'm there probably every month, every other month. And to my mind, yes, there's a movement, those jurisdictions are more popular than ever, but perhaps due to non-tax factors. So for example, for Singapore, it's super attractive for those who would want to avoid the sensitive political situation in Hong Kong, Taiwan, and mainland China. And in Dubai, there's also a large influx from Russia and from the Ukraine. So again, it's not necessarily around tax, but about other non-tax factors. In your practice, which jurisdictions you see, just anecdotally, are more popular than before, and that they seem to be attracting that high net worth individual?
Yeah, I mean, Dubai has attracted an incredible amount of Russians. There's no question about that. If you're a Russian, then the world has become really a complicated place to maneuver. And Dubai is one of the few countries which have open arms and welcomed Russians. So there has been a huge influx of both clients, advisors, and other sorts of people who provide services to Russians. So that was really one of the big events in 2022. Singapore, on the other hand, obviously benefited from the deteriorating relationship between China and Hong Kong. So Hong Kong becoming more and more sucked into this. I think it was called one country, two systems, but it's more like one country, one system, a thing. And you had these before COVID, these demonstrations and a clampdown on rights which have been guaranteed to the citizens of Hong Kong and which were basically trampled. So there has been, as you said, quite an exodus of people. And Singapore is just around the corner. Well, not really. It's a few hours, but it's more or less around the corner, and it is a fantastically liberal. It has a fantastically liberal economic system, and yeah, it has English as its main language. It had a great sort of ecosystem of advisors and banks and family offices and private wealth managers. So everything is there. It's really a fantastic place, and I envy you that you are there.
So in terms of trends, you see those jurisdictions as particularly popular within recent times as well. Okay.
Yeah, definitely.
Right. My last question, because I know that we're trying to keep this within an hour, is about the Shell directive. I just see it as just one of the many rules that have been being phased in all, in so many spaces and so many jurisdictions, and even at a supranational level, that basically the message that we're getting is that if a structure does not serve a commercial purpose, it's not going to be looked upon favorably. So there must be some commercial benefit, not just a tax benefit for whatever it is you're trying to structure. So, I see it as, this huge push, and it's going to make, the whole space of tax planning, it's going to become even more restrictive than it already is, because it's trending in that direction. So it's being really pushed in that direction, and people who make it sound easy, they just go on again social media and say all you need to do is form a company in XYZ and you automatically have all these benefits. They just seem to be missing the point of this huge wave of regulation from all the major jurisdictions, from the North Americans, from the Europeans, from the major Asian economies as well, that are all heading in the same direction. What are your thoughts on the Shell directive in particular, and the major push in general?
Yeah, well, Darren, as you said, the EU's Shell directive, as it is colloquially called, the directive against shell companies, will make the life of a tax planner a lot harder. The goal is basically to get rid of companies which have no economic, as I said, purpose, which is just used for tax planning. And the directive is very complicated and tries to sort of establish a kind of filter system where you filter out those companies which are shell entities. The European Commission is saying that do not worry, because this directive only applies to 0.3% of all of the EU's companies. So it's just a very tiny set of companies which will be affected. Okay, that is very myopic, because actually every company in the EU must go through the filter and see whether it fulfills the test, whether it belongs to the 0.3% shell companies or not. So it will create a lot of compliance, a lot of compliance requirements, a lot of bureaucracy for EU companies. It only applies to EU companies, and the Commission is also thinking of extending that to non-EU companies, but that is sort of still a crystal ball thing. Yeah. So it will definitely make planning a lot more complicated, and it will if you have a company, you probably have to, that is a shell company, you either have to get rid of it as soon as possible, or beef it up, or give it some kind of commercial purpose. Yeah. Give it, breathe in life, make it real, and not a shell. Yeah.
But do you think I sound like a bit of a conspiracy theorist, thinking that, hey, this is part of a wider push when the economic substance rules all over, and the EU uses this bully pulpit of the gray list and the blacklist to put pressure on jurisdictions like Hong Kong is reviewing its offshore companies. I think that's perhaps part of the reason why the Gulf, the UAE, the Arab Emirates, including Dubai, of course, now they're phasing in taxes. They're going to have a 9% first time in history. And
Yeah.
those who think that it's going to apply to domestic companies only and those offshore companies are going to be left untouched, they have another thing coming. So my point is, I see it as the registries. I know that the public access is being, but the existence of a central registry. So I see it as a wider confluence of
Mm.
political and policy forces. Do you think I'm being a bit too paranoid?
Yeah, I think it sort of there's a clear trend
Yeah.
discernible,
Mhm.
which started a decade or 1.5 decades ago.
Mhm.
Before that, the tax authorities were like totally, how you say, they were not really cooperating or speaking with each other, not exchanging views on
Yeah.
planning. Whereas we advisors, we were chatting around and meeting each other,
Yeah.
hashing out plans, ideas,
Mhm.
but they were like isolated. And this has changed. The OECD, which is the club of tax administrations, they have organized all sorts of initiatives. It began with exchange of information, which was beefed up and has become automatic with a common reporting standard. It went on with these registers, so UPO registers, which can be used by the tax authorities, which became public in the EU, but which are now not anymore public in the EU. It went on to the OECD's multilateral instrument, MLI, which closed all sorts of gaps in the application of double taxation treaties, the Unshell Directive. So it is just one theme that these tax administrations are sort of working together, coming up with ideas. They have lots of smart people, and it is no question that we are sort of doing an uphill battle. In the past, you had not so smart people, and they did not even speak English. But now you have lots of people who are in the OECD and who are very, very intelligent, and also in the European Commission. I have to make a small caveat. The text of the Unshell Directive seems as if it had been prepared by an intern. It is not really written by somebody who is very fluent. The ideas are very sophisticated, but I would say the wording of the text is the wording of the directive is sometimes a bit lacking in sophistication. But yeah, definitely there's a theme of more cooperation between tax authorities.
Gotcha. Well, on that note, Niklas, thank you so much for your time. We really appreciate you sharing your time and your profound insights on some of the wider trends that are going on in the investment migration space, crypto, and of course, the fun world of taxation. Thank you so much.
Super, Darren, thank you. Thank you too.
Right. And to those who've been dipping in and out and watching what we're doing in live stream, this is being recorded and it's available on our website within a day or so at hg.tax, as well as on YouTube, SoundCloud, Spotify, basically around 23 or 24 platforms where you would get your favorite podcast. So wherever you want to get your favorite podcast, if you missed part of this, you just tuned in, you want to hear the entire thing, just visit and you should be able to find it pretty easily. And for the next time we're going to do a live stream, just have a look at hg.tax/events. Niklas, thank you for your time. Thank you for those who have joined us on Zoom and on Facebook and on LinkedIn and wherever else we're streaming this live. And we will see you next time.